Hello everyone and welcome. It's a very big day. Central Bank of Nigeria's MPC decision day is here. Of course, the first meeting in 2019. Of course, our panel is here in Abuja, the country's political capital. We're all sitting down here waiting for the Central Bank governor within the hour to read the communique of the MPC members. Of course, as you may know, the poll by analysts that is likely that all rates will remain unchanged, but whether Central Bank change policy rate or not, something will still change within the economy regardless of what you call do nothing MPC. So let's continue our conversation where we left it off. Professor Uche Waleke of the National State University here is a professor of capital markets, Dr. Ogo Okiti, who is a CEO at Time Economics. He's also an economist as well as from SPA Professionals, senior economist Paul Alaje. Thank you, gentlemen, for being here. Prof, before we went on that break, you were saying, well, you vote hold?
Yes, because
and the reason?
Yes, the decision, of course, will be either to hold or to tighten or to relax monetary policy. There will always be the temptation. Well, I see all the members voting to hold, just as we saw in November when all the 11 members voted to hold. But there could be a temptation for, say, one or two to vote to further tighten, like Elijah said. But of course, it has the advantage, when you say you want to tighten, it has the advantage of helping you for that subdue inflation because liquidity in the system will reduce, so inflation is likely to drop. If you also tighten, it also helps the central bank to further stabilize the exchange rate because it's going to have a dampening effect on the demand for forex. Another advantage of tightening will be to at least reduce or minimize the capital flow reversals that we are currently experiencing. Now, these are the if you like, the pros of tightening. But again, would you be tightening in an environment where you have negative output growth, in an environment where there is weak aggregate demand, sluggish economic growth, just as he also mentioned? So those will also be factors to be considered. And of course, when you tighten, you further make it more difficult for even the federal government to borrow. You make it more expensive for them to borrow, especially where part of the deficit is going to be financed through borrowing. So these are some of the disadvantages that the CBN will also be taking into cognizance when voting. Now, returning to reduction, would it be possible to say also we are also reducing or relaxing monetary policy or reducing the MPR, for example? That may not be, again, be attractive or may not be compelling. And that's, again, because of the uptick we've seen in inflation rate in recent times. So if you now look at it on balance, if you take the balance of risks, is in favor of holding. And let me also say this, that part of why we may not be going for a further tightening of monetary policy, in spite of the fact that we've seen inflation rising, has to do with the political consideration, which may not be captured in the communique. What we have seen, from evidence, is that usually when there's an election, central banks tend to be dovish. Okay, it's either they're reducing or at worst they hold the rates. In 2019, two countries that will be going into elections in 2019, South Africa and Mozambique. Okay, we saw what happened recently. The South African Reserve Bank decided to hold the rates at 3.75%. Okay, in spite of the fact that inflation rate in South Africa is already inching, to the ceiling of 6%, which the South African Reserve Bank has. If you look at Mozambique even reduced rates from 15% to 14.25% by 75 basis points, and that's because Mozambique and South Africa, as I said, will be going in for elections. If you also look at what happened in the U.S., the Federal Reserve, part of what Donald Trump was always criticizing Janet Yellen for deliberately keeping the interest rate low. So in an election period, if you hike rates...
But now the rates were hiked by Jerome and President Trump.
Yes,
still came out and says considering that it should start the Fed.
Yes, it should come down. That's what people are saying.
Head or tail,
yes.
And Dr. Kitty coming here to help us. We've kept interest rates unchanged, our policy rate unchanged 14 times at 14%. How can we keep rates at the same spot and use it to grow the economy? That's where I want us to find that solution here. Well, we're heading to the third year.
Okay, I mean, first, let's let's start by saying that we've had a very, very boring monetary policy for the past 2.5 years. I mean, it's been very boring. So everybody comes to MPC and says, oh, it remains the same. You know, in a sense, you like boring monetary policy. It's very, very interesting when monetary policies are very, very boring, because it means that they're kind of neutral to growth. Okay, now, how can we use monetary policy to grow the economy? In the Nigerian sense, it's just so difficult. It's very, very difficult. This is my own take. My own take is that the preoccupation and the overriding preoccupation of MPC is to ensure that the country has external liquidity. No, they will not jeopardize that for anything. So there must be liquidity. You know, there must be liquidity in terms of the foreign exchange. So that is the overriding aim. You know, because, and that has a direct relationship with inflation in Nigeria. You see, the moment you start having some kind of volatility, you start seeing inflation playing out. Yeah, domestic inflation, yes, exchange rate. Yes. So you start seeing volatility. Okay, so that is the overriding.
So how do we grow the economy? By maintaining liquid externalities in terms of exchange rate and FX reserves and inflation at 14%. MPR 14%. How do we use it to fertilize an economy that grows at a speed at which?
I think the only benefit to the economy that I can think of is stability. At least for we've left the volatility of that 2015, 2016, and since 2017 we've achieved stability. Okay. Yeah, the rate may be high, but there's some semblance of stability.
So we're cruising at a particular
we're cruising
speed level.
At speed level, we're cruising.
We're not decelerating significantly, but we're also not accelerating significantly.
So there's nothing much the central bank can do about that.
So
that is left to fiscal authorities.
Paul, how do we increase? We need to increase speed at some point.
Yeah, sure. Sit on the first approach is what I think these MPC will choose, but it will be very wrong. At the end of it, you will see it will be sit on the first approach, which is holding rate. We said it the last time, but saying it again. Pre-election year and election year is when politicians, money wasn't flowing, but from media and so many television and radio stations, including outdoor organizations, I've started seeing some meaningful inflow of fund for campaign that is already going on. So on one hand, you want to keep inflation going down. You want to checkmate inflation at single digit, perhaps CBN target at 9%, the highest single digit. And on the other hand, you're looking at how you're going to have exchange rate stability. One thing gives you the true answer. What is it? Increase interest rate. It's going to be a tough decision. Rate could be higher. What we need to task, what we need to say is government should do what it should do, which is fiscal policy maker. Answer, what are the things, can you mention 5 policies that came from fiscal authority in the year 2018? You'll be searching for the answer. Monetary policy should do its assignment. The goal of monetary policy
the authorities have spent so much into infrastructure, building roads, rails, and bridges.
What is the total,
social investment?
What is the total volume of all this money compared to what is required to lubricate the economy? That is the question. It is not just to say that we have spent. The question is, how has it impacted the domestic economy? Listen, the way you know, economics should know, if fiscal policy makers have done rightly or they have done the right thing, is what has been happening to unemployment. Because if you are spending on rail, which has been witnessed, you are spending on infrastructure, what quantity of unemployment, what amount of, how has unemployment reduced? So you can measure that for monetary authority. What is the barometer for that? It is inflation.
So if your job numbers are heading north and you want to tighten it again, how does that?
No, it's not tightening again. No, sorry, Professor. It's not tightening again. The monetary authority have that mandate to keep its inflation and exchange rate stability together, such that you have stability and possibly you achieve your target. However, you have fiscal authority achieving improved employment rate. Now, when improved employment rate comes, if the fiscal authority have done the needful, for instance, we read that it doesn't matter whether budget is passed in January or not. It really doesn't matter. But we've also said what will be the fiscal year. Is it going to be June, July? Is it going to be July, June? Is it going to be May, April? We don't think all of those matter. But at the end of the day, the economics matter to us.
Professor Waleke, do you think it's dangerous to keep MPR unchanged at 14%
for so long?
For so long?
Yes, let me say
so that by the time we unleash either to hike or to court, we have a tide of a situation in our hands that's almost very difficult for us to manage. That is where my fear and concern. Can you speak to that? And I want Dr. Okiji to speak to that as well. Anytime we decide to hike or cut, what happens to us?
Yeah, boss, an inflation rate in this country was 18.72% as at January 2017. Today we are talking about 11.44%. Okay, exchange rate at one time was as high as $500, 500 naira to $1 US. We've also seen that purchasing managers index in a particular year was below the 50 basis reading or threshold. So you look at all of this, okay? Part of why we've had stability in the exchange rate, part of why we had disinflation for a long period of time, okay? Part of why we have this convergence across all segments of the forex market. You can trace that to the fact that the MPR has been maintained at 14% for so long. So a vote for a hold is a vote for confidence in those monetary policy measures. Okay. Now, to your question, how can we use the monetary policy to stimulate growth? Now, theory says if you want to use monetary policy to stimulate growth, you relax it. Yeah. If you relax it, credit,
flow.
Flows to the real sector of the economy, and of course, the economy is stimulated. You also have.
And we're not doing well as far as money as credit to the economy.
That's theory. I said theory says.
Yes.
But the problem we have in Nigeria is that
in practical sense.
Yes, in practical sense.
Yes.
The central bank is not just confronted with the rise in general price level. That's what we call inflation. The central bank is also dealing with negative output growth. Okay, sluggish economic growth, okay, if you like, stagflation. So when you have stagflation, you have inflation rate, high. You also have, on the other hand, high unemployment rate, downturn in economic activities. Then that's where the problem is. And that's why the central bank is always faced with this policy trilemma. Let me also say this.
Okay, Professor Uche Waleke, we need to cut in very quickly. The central bank governor, Godwin Emefiele, has started reading the communique of the outcome of the policy meeting. Let's join the central bank team at the headquarters for that.